Ladies and gentlemen, welcome to this special interview. Today we have a returning guest to the show, John Rubino of dollarcollapse.com, located at dollarcollapse.com. And I got to tell you, if you're not quite sure what's going on in the streets of America today on Main Street, if you're not quite sure what's going on in Wall Street today, it's because you're not checking out dollarcollapse.com every single day, because if you do, you will be on top of things each and every day and know where we're headed in this great unwinding of American society, in my opinion. John, I'd like to thank you for joining us again on Silver Doctors.
Hey, Paul, it's good to be back.
Now, John, it's great to have you on again, and these are such amazing times because, you co-wrote the book, The Money Bubble, and your website is Dollar Collapse, and this is quite literally what we're living right now, and a lot of people have been warning about this unfolding civil unrest and chaos for years, and now we're actually starting to see it come to fruition. So I guess the first question is, John, what is going on in the streets of America right now, and is it going to get better or is it going to get worse?
Well, the bad news is it's going to get much worse. Let me give you some background to kind of explain what's happening right now, because it's not obvious to a lot of people, I think, why all of a sudden, our cities are on fire and everything. But over the past 30 or 40 years, we've seen, a small elite, call it the 1%, call it the aristocracy or whatever, figure out a way to game the financial system. And they use the power, over the banking system to take over the government. And so now everything is set up so that our monetary policy and our fiscal policy is designed to make the rich already richer at the expense of everybody else. So basically, we've been harvested for the past 30 or 40 years. And, one of the ways they do that is by lowering interest rates to unnatural levels, which means it's harder for savers to generate any kind of income on their savings. And it's hard for retirees to live off, what they thought was going to be a 6% income from safe things like bank CDs. Now it's 0.5%, if even. And meanwhile, low interest rates push up the price of financial assets like stocks and bonds, which are owned by the already rich. So the rich get richer. The rest of us find that we don't have any upward mobility. We don't have any chance to save for our future, and we get frustrated. So you've got a whole country of frustrated people, but we're all filtering our frustration through our own experiences and our own political leanings. So you've got Black Lives Matter and Antifa on one side, who see capitalism as the enemy and are out in the streets protesting that. And on the other side, you've got Christian conservatives and small business people and everything who don't see capitalism as the enemy, but see the left, an encroaching, big, powerful government that wants to control our lives. Probably the end game for this is that each group ends up in the streets fighting the other groups, which is exactly what the aristocracy probably wants. They love the idea, I think, of the peasants fighting each other, because then we're not paying attention to their depredations. And if they end up being able to declare martial law, for instance, because our cities are just uncontrollable and the government has to step in and at least stop the carnage, they will use that as an excuse to turbocharge the process of harvesting the rest of us. They'll push interest rates down into negative territory, and they'll massively increase government spending in ways that help the rich. So they'll continue to get even richer, while the rest of us are locked down and there's nothing we can do about it. And their greatest nightmare is for all the peasants out there to figure out that they have a common enemy and unite, and really start trying to change things. Either way, either of those scenarios is pretty chaotic, right? Which means there's no real easy way to get through where we are right now to some kind of a sustainable future. So we have to go through some kind of process of extreme pain. Either we have a massive financial crisis, which takes the place or takes the form of Weimar Germany hyperinflation, or a different kind of crisis that's like the 1930s deflationary crash, or we have something like the French Revolution, where the peasants rise up and hopefully only in a financial sense decapitate the aristocrats, but something much crazier than what we have now is coming, because we've borrowed way too much money and in other ways created an unmanageable system, such that we can't get from here to a good future without going through some kind of a crisis. So yeah, it's going to get worse before it gets better. The form of getting worse is kind of hard to predict at this point because there are a lot of different ways for us to go, which, that kind of takes us around to the whole precious metals thesis, because if you can't stop what's coming, your vote doesn't matter anymore. What you say and what you do online doesn't matter. How, what you say to your friends, none of that matters, because we've got this kind of institutional momentum going now in the direction of financial crisis, civil unrest, et cetera, et cetera. If none of that, if you can't stop any of that, what do? How do you protect your family and yourself? Mm-hmm. And one way to do that is by shifting your finances from dependence on fiat currencies and financial assets in general towards a focus on real assets, things that governments can't create more of out of thin air when they start to panic. And that's, historically, that's gold, silver, farmland, maybe energy assets, maybe well-chosen rental houses, things like that. So that's something we can do. This other stuff, there's nothing we can do about it. It's just going to happen as it happens. But we can at least protect our families and ourselves by taking reasonable financial steps in the short run.
And let's explore that for a while. And let's explore this in the context of the Jackson Hole Economic Symposium, because I'm not sure how much of the Fed Chair Jerome Powell's speech you caught today, but, apparently it's supposed to be this big game changer. But the big topics were employment and the big topics were inflation. And let's stick on these two subjects for a little bit here. With employment, John, it's interesting because, apparently the Fed is looking at this major shift to help boost employment. And they keep talking about, we're reaching out more to help bail out municipalities and bail out even smaller businesses. So they're loaning directly to smaller businesses now. But, the whole thing just strikes me as disingenuous because, I'm looking at the Fed's birth-death model, and in May, supposedly, on net, 345,000 new businesses were born. In June, 295,000 new businesses were born. And in July, on net, 241,000 businesses were born. So on net, we have almost 1 million businesses born in the last 3 months. And I took a couple road trips this summer, including one to Washington, D.C., and on net, I see stuff closing down all around me. So, it's kind of disingenuous in my opinion that the Fed is focusing on their employment and their inflation like they are, but they're looking at statistics that aren't really, in my opinion, truthful. So I guess the question there is there any hope for employment that the Fed can do anything, especially when they're going off of these kind of what I would call fabrications of statistics? And does that spell out hope for Main Street? Or what else I'm thinking about is it also possibly spells out opening the door for a new Green Deal program. If they're going to really work to boost employment in the employment sector, well, the government could come in with a bunch of fiscal programs to try and make that happen. Did any of that make any sense at all there, John?
Yeah, let me take it piece by piece. First of all, yes, they're lying to us about the big statistics, and they've been doing that for a long time. For instance, inflation, as the government defines it, has been really well behaved. In other words, prices have not been going up, when in fact, a lot of prices have been going way up. Stocks are through the roof and bonds are through the roof and high-end real estate is at record levels. But those things aren't included in the consumer price index, in the government's version of inflation. So they're able to point to, 1.5% inflation and say, okay, that it's too low. So that gives us an excuse to push interest rates down even further, which, what I described earlier was this game that the financial world is now playing, where all policies enrich the rich at the expense of everybody else. And so that's part of the reason for them lying. A low inflation rate gives them an excuse to do things that push up stock and bond and real estate prices. Whereas if they were telling the truth and we counted financial asset prices at record levels as inflation, then we'd recognize that we were already in a very inflationary environment. So that's one thing. The other thing is this pandemic came out of nowhere Probably, some people think that some people call it the pandemic, where it's part of this process of pushing us over the edge so that they can then declare martial law. And I'm not a doctor. I don't know really anything more than the average person knows about the pandemic. But anyhow, it came. It's here, and it's led to lockdowns, which have just shuttered big chunks of the economy. There's no way you fix that in the short run, because for instance, when a restaurant closes, it fires all its people, it sells off all its equipment, and just because the economy gets a little better in the next 6 months, that doesn't mean that entrepreneur is going to go back and start that restaurant up again. That's a big deal, and they probably won't do it. Same thing with a lot of other kinds of businesses, where once they close, they're not going to be replaced again anytime soon. So you've got a situation where, surprise, surprise, the big powerful companies are either getting government bailouts or coasting on the cash that they raised in past years. They're surviving, thriving, and taking market share from small businesses, which is kind of an acceleration of the process of the harvesting of everybody else by a small group of elites. So no, there's nothing the government can really do to rejuvenate the economy after this lockdown, because we were already so indebted that we had a big financial crisis coming regardless. So this was just the pin that popped the bubble. But the bubble was always waiting for a pin to come along. So if it wasn't the pandemic, it was going to be something else. It was going to be a Middle Eastern war, or something where Russia and China and us were shooting at each other somewhere, or some big bank blowing up. Deutsche Bank was the main candidate, but there are lots of other banks that could crash and start pulling down the other fragile players in the global financial system. So something like that was going to happen. This is what it was, and it's not clear how you take an economy this highly leveraged and turn it back into an organically growing, sustainable economy without getting rid of a bunch of this debt. So that's really the big question. How do we get rid of the debt? And, as I said before, we got a few choices, but none of them are pleasant. They're all going to be incredibly painful. And yes, governments are going to run bigger deficits going forward, massively bigger deficits. They're going to have programs like infrastructure build-outs and things like that, where they borrow a lot of money and spend it on roads and bridges and whatever. And that puts some people to work. But it's borrowed money, and in a system where we've already borrowed way too much money. So, it's just common sense that you can't fix a debt-driven crisis with more debt. So we'll try it, and at the same time we're borrowing all this money, we'll push interest rates down to crazy low levels, into negative territory. But all that's going to do is shift the pressure over to currencies. If you're borrowing way too much money and you've pushed interest rates down to unnaturally low levels, your currency is the thing that suffers, because people look at, okay, the government's going to try to engineer high rates of inflation forever, which is what Fed Chairman Powell came out and said today, that the Fed is going to now accept higher rates of inflation going forward, and not just accept, but engineer those higher rates. So people look at that and they think, well, okay, if there's going to be 3 or 4% inflation and my bank account yields 0.5%, and they're pushing it down to negative territory, so it's going to cost me instead of pay me, why would I want to hold this currency? Why would I want to hold dollar cash, whether in a bank or under the mattress, as a savings vehicle? Because it's just going to get less and less valuable. So people, and a critical mass of people at some point, shift out of the currency and into real assets, and that spikes the price of real assets, and then starts off kind of a death spiral for the currency. And we've seen this happen dozens, if not hundreds of times in financial history, and it's just that people haven't really been paying attention or bothered to educate themselves about financial history, because times have been basically pretty good for quite a while. But in pretty much every one of those times in the past, you saw the currency start to fall at an accelerating rate, and people shift into real assets like gold and silver. The people who held gold and silver did great. The people who trusted the government and held financial assets got crushed. And frequently in the past, that wiped out the savings of a whole generation, which changed the culture in a way that led to authoritarian government. After the French Revolution, they had a hyperinflation, and then they got Napoleon and a whole generation of European wars. After the Weimar Germany hyperinflation in the early 1920s, they got Hitler and World War II, and that's one of the things that is most scary about this scenario is that, yeah, we're screwing up our finances. And if there was an easy way out of this, so be it, let it happen. But frequently in history, screwing up finances leads to screwing up the political system, which leads people to accept authoritarian rule as a way to stop the bleeding. And then you get something very different. Your culture changes in a fundamental way that people didn't see coming. And once it has changed, there's no way to fix. So, that's to me is the big scary part of this scenario, because it's conceivable that we have a financial crisis which leads to a currency reset where we just go back to the gold standard at gold, at $10,000 an ounce. And that, eliminates a lot of debt in real terms by devaluing the dollar. And maybe that gets us through it. But I'm afraid that's a low probability event, whereas a lot of the really scary stuff is higher probability. Which, means we should be prepping. We should be preparing for the crazier scenarios while hoping for the less crazy scenarios to take place, because there's nothing we can do to change the outcome. All we can do is protect ourselves, and that's the intellectual challenge for individuals right now, and that should be the thing that we're most focused on.
And I would agree with that, what you said there. And it's interesting because, they're talking about inflation targeting. And, I think Powell's direct words, and I wrote it down here, so let me read it. He said, he just said, in their Fed speak, he just said, we'll moderately run above 2% for some time. So, I'm thinking in my mind, well, if the dollar's devaluing by $2 and if real money by 2%, and if real money, gold and silver are appreciating by 2%, well, I mean, that's a no-brainer just one way or another, because the dollar is essentially on fire, and gold and silver, you can melt those down and recast them time and time again. But staying on this inflation for a minute here, John, a couple of the things that is interesting is let's talk about inflation in terms of the debt too, because it's not just the national debt that is a problem, but it's also like, state debt, and it's also like city and county debt. So just the debt is just explosive all the way around. So is what we're seeing on the streets indicative of the worst cities out there as far as their finances go? And is it just slowly going to trickle out throughout the entire United States, how you drop a rock in a pond and it just ripples across slowly? If that made any sense there. And then the other point about inflation that I wanted to make is, it's just totally disingenuous when Powell brings up something when he says that, interest rates have, and this was also a direct quote from him, he said, the general level of interest rates have fallen. No, actually what has happened is you guys have been buying up bonds and suppressing interest rates. That's what happened. It's not just some natural phenomenon. So what would you like to add on to that there, John?
Well, Jim Rickards has an analogy that I think is pretty useful here. He says the Fed and other government agencies that are messing around with the economy think they've got a thermostat where they can just turn the dial, from 70 to 72 degrees, which in interest rate terms would be accepting an inflation rate of 3 or 4% rather than 2%, while holding interest rates at 0%. And that it's okay because you can make these fine adjustments, and the system, fluctuates around equilibrium. But what they're really working with is a nuclear reactor, where you push it into the red and it goes critical and melts down. And this idea that you can raise inflation from 1 or 2% to 3 or 4%, and then just dial it back later on when you feel like it, is just baffling, because that's not how it works. Once people get the idea that this is the new reality, they react to it, and they react, in large numbers with a lot of money. And the system spins out of control. The Fed cannot control inflation of 3 or 4% when everybody assumes that that's what it's going to be, if not higher, going forward, because we will act in ways that kind of neuter monetary policy. It won't matter what they do. And we had this happen once back in the 1970s. In that decade, people of a certain age will remember how crazy things got when inflation spiked up to double-digit levels and the dollar was crashing. And what we had to do to stop that was we raised interest rates to 20%. So can you imagine them trying something like that now with the whole system as deeply indebted as it is? It would bankrupt everybody. Now onto your mention of states and cities that are going bankrupt too. Yeah, everybody at every level of U.S. society is over indebted, and it's not just the federal government. And especially, in the case of unfunded liabilities, states and cities are functionally bankrupt right now. They're only surviving because they can play financial games and kind of delay the reckoning of a pension plan that can never be covered in full, but nobody knows it yet. But I just posted a thing this morning with the title, "Is California Over?" Because they're kind of the poster child for, a dysfunctional development strategy, and that is now blowing up on them because they basically set up a system where you drive 40 minutes on the freeway to go out to dinner, and everybody lives in suburbs that are really far from everything else, and the amount of fossil fuels that you need to sustain that is one thing, and the ability to generate electricity for something that complex and something that crazy is another thing. And then you've got massive homelessness. At the same time, you've got out of control fires because they've been moving so many people into areas that have a lot of brushland. So thousands of houses are burning right now. At the same time, their pensions are blowing up because they didn't put enough money away to cover public sector pensions. So, it's not clear how California survives this without a gigantic federal bailout. And that's the big question now. Will these states and cities that are going bankrupt, here again, the pandemic was the pin that popped their bubbles too. So Chicago and, big parts of New England and big parts of the West and a lot of old industrial cities and other places, they're all going bankrupt. And either the federal government bails them out, or they literally default on all their debts, which throws the muni bond market at least, and probably the corporate bond market, into chaos, and forces them to fire thousands and thousands and thousands of police and firefighters and teachers, so that they basically drop into third world status, a lot of these places. And on the other hand, if the federal government bails them out, that's trillions and trillions of new dollars that have to be created in order to do this, which puts even more pressure on the currency. So you end up, all roads lead to some kind of a currency crisis. And that'll probably be the question next year. I think we'll probably get through the election without bailing out every big city in sight. But as soon as the election's over, that's going to be a front burner thing. And if the Democrats are in charge, they will enthusiastically bail out California and Chicago and any number of other cities and states that are bankrupt. If the Republicans stay in charge, they won't want to do it, but they might end up seeing it as the least bad option on a really bad list. So I think it's completely possible that in 2021, we end up bailing out all kinds of bankrupt entities with insane amounts of new money, and that that combined with a new inflation target of 3 or 4% in the intermediate term just freaks people out, and a growing number of people just want to bail on the financial system. So think back to the 1970s, how crazy that was, and realize that we don't have a fix this time around because we can't raise interest rates really ever again. And that's a situation in which there's no solution and the problem's getting worse. And what do you do? And the answer is, who knows? Hide. And again, that takes you back to precious metals, because that's where people have historically hid from financial crises. And this is going to be one for the ages. This is going to be the biggest financial crisis in human history, because we've taken on more debt than ever before in human history. Which means that the traditional safe haven assets might be an even bigger winner going forward, just because there's so much capital that can conceivably flow into them. So this could just be a precious metals bull market, the likes of which we've never seen in the context of a world, you really don't want to live in, but you have no choice. So that's really the only bright spot. It's possible to make a lot of money from big crises. And this might be the equivalent of the big short last time around, where you shorted the housing market and you made a fortune. Well, this time, maybe you short the dollar by getting into precious metals, and that's how you make a life-changing fortune.
Indeed. And, what we're talking about here are very profound, systemic, major tectonic shifts that just can't be stopped at this point. Like you said, it's a no-win situation all the way around, because you either have the massive deflation collapse or the hyperinflation, which I think is going to be the hyperinflation. But shifting into gold and silver here, let's talk about a little bit more like midterm stuff as opposed to the systemic, because what I'm looking at in gold and silver right now, and it's funny because Powell comes out today and he's like, we're going to let inflation run hot and we're actively going to seek above 2%. And what happens? Gold's down $100 and silver's down $1 after he says that. It's amazing. But just in the midterm, I'm looking at three things that came out this week that are supposedly weighing on the metals. And on Sunday, we had that breakthrough treatment on coronavirus that Trump announced. But the breakthrough treatments are in development all the time, and new cases have been declining for several weeks, according to the CDC. So I don't really look at that as bearish for gold and silver. Another thing that kind of was weighing on the metals this week was, there was a report that trade talks have resumed again with China. And I'm thinking the Cold War is heating up, and they're going to throw that headline out there. It did more to boost the stock market than anything to new all-time record highs. But it was given as an excuse to weigh down on gold and silver a little bit. A third thing that came out this week, and I can't even remember the third thing, but I wrote about it. The blood treatment. Oh, the Jackson Hole. Just what Fed Chair Powell said about inflation is uberly bullish for gold and silver, even though the prices are down. But then what I'm looking at as far as the bullish factors, we had Warren Buffett last week with the Barrick Gold purchase, Berkshire Hathaway. So that is like the green light for institutional investors. And then another bullish factor here is if there's another round of economic impact payments that they're called, those $3,400 checks for a family of four, for a fact that some people that are smart enough to save that money are going to move into gold and silver. So to me, just the bullish factors are overwhelming, in addition to the major systemic stuff that you just laid out. So I know I kind of threw a lot at you there, but is there anything you'd like to add on top of that, John?
Well, no, Paul, you're right. The fundamentals for precious metals are extraordinarily positive, just because we're stuck in a situation where we have no choice but to continue to borrow huge amounts of money and continue to finance that new debt with huge amounts of newly created currency, without leaving everything else out of the equation. The fact that that is true means that the currencies are going to be under pressure, and precious metals will do well against pretty much every major currency, and the rest of this stuff is noise, really, because you could take the pandemic completely out of the equation, just make it go away right now, and we're still the most indebted society in the history of the human race, and that fact isn't going to change, and that fact is fundamentally positive for precious metals. So when the Fed talks, they usually try to use focus group language to get what they want, which is stocks going up, precious metals going down. So most days when a Fed head says something, it's negative for precious metals. And, at the same time, they've had a huge run, especially gold. Gold was at a record high level just 2 weeks ago, right? And the fact that it's choppy now is to be expected, because when you have a big run in anything, any asset, you create a lot of people with profits to take. And they're sitting there looking at it and going, all right, I should take a little bit off the table now so I don't get round tripped. And at the same time, you've got people sitting there going, damn, I can't believe I missed this. If it goes back down, I'll buy more. And that's how you get choppiness, which in finance they call consolidation, where people are taking some profits and that pushes the price down. Then the people who miss the last move see it go down a little bit and think, well, all right, I'm going to buy now. And then it goes back up. And you've got to have that kind of back and forth for a while until the weak hands are pretty much done selling and the strong hands have accumulated and they have no intention of selling at this price. And then it can go on to the next leg up. And those legs will be coming, I think, because um, there's no doubt that interest rates are going to stay at zero. That's the best case scenario for interest rates. If they stay at zero, more than likely they go negative pretty soon. So that is baked into the cake. It has to happen. Government spending has to soar. That's also baked into the cake. It has to happen. So that's really all you need to know about precious metals, is that debt is going to soar and interest rates are going to stay very low. And that is paradise for safe haven assets. So the rest of this stuff, it'll come and go. It's going to happen. There are going to be things that seem bullish or bearish for precious metals because somebody said something or whatever. But the underlying fundamentals are going to be positive throughout that whole time. And the Warren Buffett thing, like you mentioned, is a really good indicator of what the mainstream is thinking now, because mainstream investors don't pay much attention to gold in normal times because it doesn't generate cash flow, and they're perfectly happy to hold dollar cash and then put it to work in growth stocks. But when gold mining stocks become growth stocks, that gets the attention of generalist money, mainstream investors. And you're seeing a lot of big names say, oh, now you should have 5 or 10% of your account in precious metals related investments, either the bullion or the mining stocks. And that is a huge change in market psychology and funds flows, because right now, maybe 1% of global investable capital is in precious metals. Let it go to 5%, like a lot of big money managers are talking about now. And that's maybe an impossible amount of money. It's possible that gold and silver could not accommodate 5% of global investable capital. You just wouldn't be available. You couldn't get those metals in physical form. And if there's a perceived shortage of physical metal, then that is insanely bullish for the miners, because that's something you can always buy. So if you can't get silver coins, you can buy the shares of silver miners. And so the capital will just then start flowing in that direction, which we've seen lately. It was hard to get gold and silver coins at reasonable premiums. And no surprise, the mining stocks really started to take off at that time. So, magnify that process by 10 or 20 times. And you get an epic bull market in the mining shares, which, it's about time. It was a long wait for the miners to really start behaving well. But I think that's in store for the next few years, when you see the big mining stocks attract the first wave of generalist money. And then the juniors attract huge amounts of new money once the big miners are irredeemably expensive. Then you start looking for what else to buy. And these little junior stocks they're thinly traded. They're very cheap at the moment, and that makes them 10-bagger potential plays going forward when this kind of money starts pouring in. So it's a potentially fun time for people who are invested in gold and silver related assets. But not a fun time for almost anybody else.
Indeed. And I think that anybody, especially those perma bears, because we post some of their stuff too, and they send us the stuff, and they're talking about a repeat of 16 and it's just going to go down again. And I don't think so this time. I don't think we're going to repeat 2016 where everybody's hopes get dashed again. Now, John, as we move through summer and into fall here, I just kind of want to get your opinion about what is on your radar the most? Are you looking most at the civil unrest and the chaos and the rioting in the streets? Are you looking at the election and the ramifications of that the most? Are you looking at the Fed's new, renewed rejuvenation for employment and interest rates and inflation? Or what is the one thing that has you most concerned about as we move through fall here, John?
Well, I think the Fed's thing is kind of what it is right now. We understand it. They're going to keep interest rates low for a really long time. So we get that. And I think the civil unrest thing is probably going to be around for a while, because nothing's being solved, and new videos keep coming out to send more people back into the streets. So that's a given. But I think this election is a potential change agent going forward. It's a potential inflection point, because it's not clear we can even have a presidential election with a pandemic lockdown in a lot of places. And it doesn't look like the lockdown thing is going to go, no matter what you think about the virus, from a epidemiological standpoint, it looks like governments are responding to what they're seeing with lockdowns of one kind or another. Colleges are sending their kids home after calling them back to school, and then in 5 days, a few kids get sick and they send them home. Things like that are happening out there, which makes an election probably a hard thing to do. So let's say this is a really close and contested election where a bunch of mail-in ballots are being rejected, but people are arguing about whether they should have been, and other places just can't seem to get it together to report their numbers, and so we don't know who won on election night, and the lawyers are swarming all over it, and people are screaming on MSNBC and Fox about the election being stolen. That's a potential destabilizer for us, and it's at least possible, if not probable. And I don't see how we do this in a smooth way. And so that could feed back into finance if that happens. So it seems like a lot of these other things are just kind of there. They're not going to change, and maybe we get used to them as the new normal. But this, an election being contested and possibly stolen is a very big new deal. That's something that we don't have in front of us right now, and it could be added to the plate with none of the other things being fixed in November. So that's to me, the biggest destabilizer of the financial system in the intermediate term.
And what do people get out of dollarcollapse.com? What do you want people to get the most out of dollarcollapse.com, John?
Well, that's a site where I cover the stuff we've talked about on a continuously updated fashion. And the idea is you show up there, spend an hour looking at the headlines and whatever else I've published lately, and you're kind of up to speed on the dark side of the financial market. And there's a join our email list button that you can click on, put your email there, and then I'll just send you whatever I write for free without sharing the email list with anybody else.
John Rubino, I'd like to thank you for joining us again on Silver Doctors.
Thanks, Paul.